What's up, guys? Believe we are on. I guess we are. All right, guys. What's up? And welcome to today's episode of BFR. And I think this might probably be the last video on BFR for the meantime, or maybe if I decide to add any other thing to it, probably what should I call it? I don't even know. Maybe fib levels or something. Sorry, guys. But for now, I've not decided what else to add to BFR. But for now, I think this one is quite where we are, and makes sense. So let's just dive right into it. Don't bother about the boxes you are seeing. After this video, you understand what they are for and how you should use them. So our topic for today is time and price. Price and time theory, or time and price theory. Let me just call it price and time theory. So if you ask a trader what they understand by price and time, they will tell you Q zones, like Q zones. Yes. The ICT Q zones, the Wyckoff Q zones, the Gantt and the Quant's Q zones or stuff like that. But time and price, it's somewhat different from just Q zones. I used to be a Wyckoff trader, so Wyckoff is all about price, time, and volume. So I knew about all these things a long time ago. And when was it Rana, or I can't really pronounce his name. When he mentioned volume and this thing, I was like, fuck, what the hell have I been doing? Why didn't I even add these things to BFR in the first place? Because I've been a Wyckoff analyst for a very long time. So I understand the importance of price, timing, and volume. So I decided to work with volume first, which I've dropped the video, and of course, of course, it did absolutely well, like you guys suggested. But now is another concept, very important, which is the price and time theory. So if we start from the yearly, I say the year. You understand that the year is made up of 12 months. So if we divide that 12 months by 4, we'll have 4 quarters of 3 months each. That's January to March, first quarter, April to June, July to October, sorry, July to September, then October to December. 4 quarters. So each of those quarters represents something in a year. Each quarter gives you an idea what the next quarter would do. So that's why I have quarter one, quarter two, quarter three, quarter four. All of them are together. All of them work the same way, but in different time frames. Like if I'm doing yearly, what I'm merely doing is that I'm showing you that quarter one will be 3 months, January to March. Quarter two will be 3 months, April to June, July to September, September to December. Now, if I go down to monthly time frame, monthly. The same thing is here. If you divide the month by 4, you understand that each week, sorry, it will be comprised of 4 weeks. That means each week will represent the first quarter, or each week will represent one quarter. So the first week will be the first quarter, the second week will be the second quarter, the third week, and the fourth week. Now, this is where it gets interesting for the monthly. If the day, or let's say if the week, or if the month, oh my god, what the hell am I saying? If the month started, let's say, on a Wednesday instead of a Monday, or a Sunday, you don't start counting the quarters from that Wednesday. You wait till the next Monday before you start counting. As a matter of fact, quarter two is always the second Monday of the week. That is where it starts. Quarter two starts from the second Monday of the week, and it's almost regarded as the true opening of that month. The quarter two, the Monday of the week, the second Monday of the week. So you start from Mondays and you count. The same thing. If you go down to weekly, that's the same way it is. The weekly is also divided into 4 quarters, each of them comprising one day: Monday, Tuesday, Wednesday, Thursday. Friday is not counted for the weekly because Friday is always regarded to do its own thing on its own. That's why, if you remember when I taught price circle, my main focus was mainly on Monday, Tuesday, Wednesday, and Thursday. And I'll tell you guys, Friday could either continue or reverse. It just decides whatever it wants to do. So quarter one, quarter two, quarter three, quarter four. It's Monday, Tuesday, Wednesday, Thursday. That is how it is. Then we can even dive down to daily, from weekly to daily. So what that means is that the daily itself, it's also divided into 4 quarters. Each quarter represents a trading section. As you know, we have 4 valid trading sections in a day. 4 trading sections in a day: the Asian section, the London section, the New York section, and then the London closing section, which is what ICT students call the afternoon section. Each of them have their own price. This pricing is going to be in British Standard Time. You can go and change it to. I will send a PDF to the group right now as I'm talking now. I'll send it to the group, educational material section of the group. I'm going to send the timings for each of those sessions, or each of the quarters in a day, so you guys know what you are working with. So when you are watching this video, you should go back to the picture I'm sending to the group right now, so you understand why I sent the picture and what it's for. Believe me, guys, this is going to really improve your trading, like, by a lot. I i took these screenshots on YouTube when I was looking for the timings. So this is actually both the timing and the 90 minutes circle. But just take it that Asia, at British Standard Time, we start by 11 p.m. London time to 5 a.m. London time. That's quarter one. This is not Asian Q zone. This is quarters. Know the difference between the two of them. This is quarterly theory, price and time theory, not Q zones. So the Asia, or the quarter one, in fact, I will stop calling it Asia. The quarter one will start from 11 p.m. to 5 a.m. Quarter two will start from 5 a.m. to 11 a.m., which corresponds with London section. Quarter three will now start from that 11 a.m. to 5 p.m. to 5 p.m. Then quarter four, which is not always that important, but it is also quarter four will now be from 5 p.m. to 11 p.m. again. So this in New York Standard Time is what I'm sending to the group. You also see it in New York time. This will be from 6 p.m. New York to 12 a.m. for quarter one. Quarter two will be from 12 a.m. to 6 a.m. New York time. Quarter three will be from 6 a.m. to I think 12 p.m. New York time. Then from 12 p.m. back to 6 p.m. Each of them is 6 hours in length. That's just like dividing the 24 hours of the day into 6 hours, into four. Dividing the 24 hours in a day into four. Each of them will be comprised of 6 hours. Now, each of these is 6 hours. So if you divide from 11 p.m. to 5 a.m., which is 6 hours, if you divide it by another four, 6 divided by 4, you get 1.5, which is each of these also is comprised of another four quarters inside, which is the 90-minute circle. But for this, we are not really interested in the 90-minute circle. For now, we are not interested in the 90-minute circle. But then, this is where it gets very interesting. The true opening of London, it's supposed to be at the second quarter of this London section. Just like Asian section start from 11 p.m. to 5 a.m. London time. So inside this Asian section, the first quarter of the Asian section, that is the first 90-minute cycle of the Asian section, we start from 11 p.m. to 12:30 a.m. That's 90 minutes. Now the second quarter will now start from 12:30 a.m. London time to 2 a.m. London time. That 12:30 a.m. is the true opening of Asian section. So that is where you pay attention for people that trade opening prices. That is where you pay attention for opening session. The same thing in New York, sorry, in London. The first quarter of New York of sorry London session, which is quarter two, we start from 5 a.m. to 6:30 a.m. London time. Now the second quarter starts from that 6:30 a.m. to 8 a.m. Now that second quarter, 6:30 a.m., is the true opening price of London. Of London. But for this, we are not really sorry, someone was at my door, wanted to ask me something. Okay, so but for this, we're not really interested in the 90-minute cycle. But I'm just trying to tell you it also works that way in the 90-minute cycle. I don't really want to use the 90-minute cycle because what I was working on it with the daily cycle, which is this one. I've sent the picture to the group so you guys will know the timing in New York session. Sorry, on EST. That's New York timing. There's 6 p.m. to 12 a.m., 12 a.m. to 6 a.m., 6 a.m. to I think 12 p.m., then 12 p.m. to another 6 p.m., right? Yes, 6 p.m. So this is very important. Now, this one will be called quarter one, quarter two, quarter three, quarter four. So let's integrate it with BFR. This is our markup for BFR. This is our temporary high right here. This is where we are looking for price to take this one and probably let's assume this was also into a fair value gap. So we have two RTAs, RTA1, RTA2, or temporary high and temporary low, but I'll just label them RTA. Clone it. I'll clone it. RTA. So, but before we dive into this, let's go back here. So, what does these quarters do? Quarter one, quarter two, quarter three, quarter four. What do they do? Each quarters is supposed to represent one of these A, M, D, X. So, what does it mean? The A stands for your normal AMD: accumulation, manipulation, distribution, reversal, or continuation. That's what the X stands for. The X stands for reversal slash continuation. So that means it's either price reverses from what these three did, or it will continue what they did. So it's not really advisable to trade during the X quarter. Now, how do you know if it's X quarter? You know if it's X quarter based on what these ones were doing. So if price is making low, high, or just moving, you know that it's either continuation. If it's in opposite direction of what the price have done the entire day, you know it's reversal. So if quarter one accumulates or consolidates, you will most likely expect quarter two to manipulate what quarter one did, and then quarter three to distribute. Now, this is where it gets very interesting with BFR and every other thing you are doing. But on the other hand, if quarter one was just a continuation trend, or let's say price was moving down, and then quarter one, or let's just take it as the monthly cycle. Week one consolidated. So you expect week two to manipulate what week one did, and then week three to be a distribution phase. Now, this is not always the case in every day because, of course, no strategy is 100% effective. But with this alone, you are 60% sure of what the price is going to do each month, each week, each day. So if it was a weekly cycle, if Monday consolidated, remember when we did price cycle, where I said the highs and lows of the week is mostly set on Monday or Tuesday, like 80% of the time. Now, the remaining 20% of the time will be set on Wednesday. And this is why. If Monday consolidated for a week that is supposed to be bullish, Tuesday will set. If Monday consolidated, Tuesday will manipulate the lows of Monday for a week that is supposed to be bullish, let's say a green candle week. Tuesday we then set the low of the week. Now Wednesday we distribute, that means drive price up. Thursday, which is the X day, could either continue what Tuesday and Wednesday did, or it will reverse. Friday we do whatever it likes to do. So that is how it is. But then on the other hand, if Monday was not consolidating, Monday was a continuation trend, Tuesday will most likely consolidate. Now, Wednesday will manipulate what Tuesday did. Now, Wednesday could manipulate and set up, let's say, a week that is supposed to be high. Wednesday might manipulate, taking out Monday's low, sorry, Tuesday and Monday's low, and then forming a new low before it will then start heading up, which Thursday will complete as the distribution day. But then sometimes Monday itself will set that low because it was a continuation or a reversal week, a reversal day. Tuesday consolidates, just like let's say this is Monday is coming down. Then Tuesday we do this consolidating, something like this. Now Wednesday sets up and then takes the Tuesday's low, and then starts giving you a buy opportunity. Thursday being the distribution week day will complete what Wednesday have started. Sometimes this Wednesday might then take out even Monday's low and then set up the week. It all depends on your PDRA lies your other blocks, supply and demand, fair value gap, whatever you're looking at. Wednesday might still take out Monday's low and then head up, or it will just do this. But for a day where Monday consolidated, this is Monday. Tuesday is now supposed, because this will now be the previous week. So Tuesday we now, let's assume this is now Monday. We now manipulate Monday's low, because of course it's supposed to manipulate it, and then setting up the low of the week. Then Wednesday distributes. Thursday could either continue or reverse. Friday we do whatever it likes. That is how it works. So quarter one can either be an accumulation quarter or a continuation or reversal quarter of what happens the previous quarters. Now, if quarter one is accumulating, quarter two is supposed to manipulate. Quarter three will distribute, and quarter four will either continue or reverse. And this is where it gets very interesting. With BFR, this is where we are more likely interested in the manipulation and distribution quarters, which is quarter two and quarter three, or quarter three and quarter four. This is where we are more likely interested in. Now, why? Let's take it back to the daily cycle. This is our RTA, high and low. So now we want price to grab this high and low. If in the morning we look at price and we saw that quarter one, which is from 11 p.m. London time to 5 a.m., was a consolidation, very, very interesting. Please pay attention to this part. If in the morning we saw that quarter one, 11 p.m. to 5 a.m., was a consolidation, price consolidated throughout that period, we expect quarter two, which is 5 a.m. to 11 a.m. London time, to manipulate. And when that manipulation is occurring, it's supposed to take either of these RTA. That is when we are expected our RTA to be grabbed during that manipulation quarter. Now we get in at that manipulation or distribution. Now, if it's interesting, like let's say quarter one have happened, quarter two now grabs this and also grabs this at the same time, you'll be more likely interested in that. Okay, it has done this one because quarter three is supposed to be a distribution. Now be asking yourself, which one is it going to distribute? This one and this one. Of course, it's this one that we are currently in. That is where quarter three is going to distribute. It might still distribute this one a little, but it has grabbed two. So this is where it is mostly going to distribute to the upside. I will show you examples as I'll be going into charts. Like you are going to be blown away. There was one I talked to Musa and Derek last night where I told them, okay, look at this. Volume is saying, like, okay, BFR is saying we should buy because it has grabbed ROTA. Volume is also saying we should buy, but quarterly is telling us that we should wait a little bit longer. Something is about to happen. And then when it played out the way I said it was going to, I was also marveled because me myself, I already looked at the chart when I was back testing it. It has given me market structure shift, volume is it's complying with what price was doing. But I just had that this in me and say, okay, this is what I'm doing is I'm combining these three. Let me wait for the quarterly to do its job. And guess what happened at quarter two? Because this was during around 5 a.m. that this was given an entry. That 5 a.m. is 6 a.m. here in Nigeria. It was given at this entry at 6 a.m. But at that 5 a.m., quarter two just swept the low of this consolidation because quarter one actually consolidated during that period. This just swept that low, and I was confused. I wasn't because I expected it actually. I was like, wow, and then gave a market structure shift. It immediately retested that market structure shift and then gave a 1 to 8 risk to reward trade immediately, still inside quarter two. Quarter three now started, which was supposed to be the main distribution phase. I will show you that trade. It still reversed back into an order block. Immediately it touched that order block. Price then went high. I was like, fine and good. This is what we are doing. So if you have your ROTA marked out, and then we have quarter one, which is Asian, let's say price is here, consolidated. What we would expect is for quarter two to manipulate this one at least. Let's just take this one for instance, and then for quarter three to distribute. And this is also where it gets interesting. Pay attention to this rule. If you have this setup now and price now comes down to take this your temporary low right here, because we have taken a temporary high, it's not temporary low. On no occasion should you look for market structure shift to take this trade, because this phase is the third quarter's phase and it's meant for distribution. Price is not going to reverse. Price will most likely sweep you, and that's your stop loss, and still continue whatever it's doing. But then, if this was now a continuation trend, quarter one, and then quarter two now consolidates, which is London consolidated. This is now where we will wait for quarter three, which is New York, 11 a.m. to 5 p.m., to manipulate. Now, during this manipulation is now where we will look for entry at New York session. If price now manipulates this high, we look for sales and then write it down. If it now takes this other one, we look for buys because we are still at manipulation phase. If it manipulates this one, we look for buys because the fourth quarter is now supposed to be the distribution phase. So what I'm trying to say, I don't know if what I'm saying is making sense. We have an ROTA, and then we wake up in the morning and we saw that, okay, quarter one have consolidated. Fine and good. That has already given us that quarter two, which is supposed to be London, is the one that is supposed to manipulate our ROTA. That means grab this temporary low or high, and then we look for entry. Now, for a case where we already had a let's say this is a temporary high. Let me take this up. Let's say this is a temporary low. Sorry, a temporary low right here. It has been grabbed. Let's say by previous quarter, and price now has given us market structure shift, but it's not retested. The same thing is applicable because this now becomes our area of interest, which is our demand zone to drive price. Now, the same thing happened because we are now in a new day. If quarter one, which is New York, sorry, which is Asia, 11 p.m. to 5 a.m., have consolidated above this area, it has consolidated. We'll now expect quarter two to manipulate right inside this our demand zone, and then quarter three to drive it. If those three things are in place, there is 70% chance that that price action will play out. Then, for instance, we saw that Asia or quarter one was actually a reversal because price is already moving up. It's now a reversal coming down. We will now expect quarter two to consolidate. If quarter two doesn't consolidate, you leave the trade. Like I said, it's not every time that it's supposed to play out like it is going to play out like that, but at least 70% of the time. This is what price and time is doing. It's supposed to show you what you are supposed to look for. If this happens, you do this. If this doesn't happen, you do that. So if quarter two now consolidate, we now expect quarter three to tap into our demand zone, which is the manipulation and start going up. Quarter four to even continue because quarter four is not supposed to be the main distribution phase, which is the afternoon section. Like, for instance, there are some times where you wake up in the morning, you are in a trade, and then London starts. You expect price to actually ride to the moon because London has started. But then there's no volume. You start asking if London bank is on holiday or if there's any bank holiday in London or stuff like that. Now, if you go back and check that day, you will see that Asia or quarter one was actually trending instead of consolidating. So that trending will now be left for London itself to start the London can start the with consolidation and then also start the manipulation on its own. But then are most likely to be completed by New York and then drop because New York is supposed to be the main manipulation during that phase. So what you are mostly looking at is that your PD arrays should be or your temporary highs and lows should most likely be taken or mitigated during manipulation or distribution phases. Sorry, for your PDR rate to be mitigated at manipulation or distribution phase, but your RTA should only be taken during manipulation phase. If it's taken outside of manipulation phase, forget it. That rate is going to fail. So let's go into examples. I don't know how long this has been. Let me check. Okay, 31 minutes. It's not that long. So let's go into live examples and you'll see. Which one do we start with? Let me go to auto. Sorry, auto fits. Okay, let me start here. Let me start with this one. I think this is okay. Start with this one, or should I start with this one? This is also it. Okay, and this. All right, let me use this one first. So I think okay, this was my temporary or RTA right here. Sorry, let me bring it out here. Please forget about the boxes for now. So we have this temporary high. It's inside a fair value gap. It was on the 1 hour, please. I'm not going to be diving from 1 hour to 5 minutes. You guys already know how we spot our temporary highs and lows. So we have this temporary high right here, and price is supposed to take it. Fine and good. We are supposed to take it. Now, in the morning, I woke up and then I saw from 11 p.m. right here to 5 a.m. Quarter one was consolidating. So what does that show me? That have already given me an insight that this my temporary high should now be taken at quarter two. And if that happens, that is when I will start looking for trades. And that is exactly what happened. At quarter two from 5 a.m. till 11 a.m., price took the temporary high at exactly 8:35. 8:35 and then gave me a market structure shift. This is now, sorry guys, I'll make this a little bit thicker. So this is now my accumulation A, my manipulation M. So quarter three is now supposed to be my distribution phase. And that is exactly what quarter three did. Tapped into your order block or your demand zone or supply zone, and then we rode price to the downside. Exactly what happened. Now, this is another very interesting case because I had this temporary low marked out already also, as you can clearly see it here. But then look at what happened. Quarter one, this is now quarter four of that particular day. Of course, we are no longer interested with whatever quarter four did because AMD happened in quarter one, two, and three. So quarter four is just likely to be a continuation or reversal, but in this case, it first continued before it consolidated. Now, look at this one. Quarter one being 11 to 5. Asia or the first quarter was actually trending. It was trending and it was not consolidating. High, low, sorry, low, high, equal low here, low, made a break, and this one, it was moving to the downside. Now, this already showed me that London itself should consolidate, and that is exactly what happened here. London had no clear direction, just continued this move and then broke to the upside again, and then come down and then went up, and then like you can clearly see the consolidation right here at London. This is where you are supposed to actually have a momentum in the market because London has most of the volume in the market. But it was just moving back and forth. Why? Because this one have already set the pace for what we are supposed to get at quarter two. Quarter two now consolidated. That was just the next day after this one. The next day after it. Quarter two now consolidated. And after the consolidation, what happened? Quarter three, which is now supposed to be the manipulation, was now what manipulated our temporary low we marked out and provided a market structure shift. Still gave us an entry. Now this is now quarter four, which is going to continue what quarter two already started. Sorry, quarter three already started. So you can clearly see how everything is playing out together, and this actually did play out very, very nicely and stuff like that. So if we go back to the GBP USD that we were using, where do I even start? Where do I start? Should I start here? Should I start this one? Oh, okay. Let's let's start with this one. This one. I think okay. It's with this one first. First, this one right here. Let's start with this. I had a structure, a temporary high, and a temporary low at the same time. Now, quarter one being Asia consolidated. As you can clearly see, quarter one being Asia consolidated. Now, what happens after that? Quarter two now took our temporary high and gave a market structure shift, but there was no retest. And then that same quarter two came back and took out the temporary low. So our buyers have now shifted from this one to this one. We were supposed to get the entry here if this was not taken. Now quarter two have now manipulated this and this. So our buyers is now shifting from selling to buying. And this was actually NFP because this was Friday. So this was NFP. So we were not supposed to get any trade around this quarter three because of NFP. But then quarter three now gave us a structure shift after this manipulation. He gave a structure shift and distributed without us getting entry. Now, these have already set up a tone for a demand zone right here, which have not been mitigated with RTA. Now, the next day, being Monday, we now have a clear direction. Of course, we now want to buy because price have already set up something for us to buy. But then at that same time, quarter one was still a consolidation phase, as you can clearly see it. Now, quarter two is supposed to manipulate down to 11. This is quarter two, supposed to manipulate down to 11. 11. Now, the funny thing about this quarter two is that it manipulated the high and the lows at the same time. It didn't quite complete the manipulation. Like I said, it can start it, but then New York or quarter three, which is supposed to be a distribution, will complete it as long as you already have where you are going. Unless if this was an RTA, you expect it to be finished here. This quarter three should not be among it, where you are now saying, okay, since quarter two didn't finish it, quarter three can finish it, and then I'll get it on my sell. No, it doesn't work that way. Unless it's somewhere you want to buy from or sell from, stuff like that. So quarter two now manipulated, but we didn't have a temporary high for us to be focused on. All we were focused on was this demand zone. And look at what happened. This demand zone was produced by quarter three of the previous day, and that same quarter three of the next day tapped into it for a buy. Of course, we've already have our consolidation, our manipulation, which we know we are supposed to buy, and then that is it. We get in on a buy and price did its thing. For this one, this was a clear consolidation. Quarter two manipulated, but then just headed down because of news or whatever it is. And then this same quarter two, exactly what happened here is repeating itself here. This same, sorry, not here. Exactly what happened here is repeating here because quarter one have consolidated. Quarter two manipulated both the high and the low. We have this temporary low, which I marked. Manipulated both the highs and the lows. Let me put the box so you guys will understand. From that 11 to from that 5 a.m. to 11, 5 till this 10:30 is 11 right there. Good. So now quarter two manipulated this, but then with high impulse volume manipulated this one too also. So our buyers immediately shifted from this one down to this one because we didn't get an entry here, and we are now stuck with this other temporary low here. Like I said, the manipulation is what is supposed to take your temporary highs and lows. Now, quarter two have now manipulated this. Someone will be asking, but Lawrence, this is a market structure shift. Price have shifted here. Why don't we get in here at this point and then start buying? If we got in here, we would have actually lost the trade, as you can see. Now, that is where volume comes into play. Volume. As you can clearly see, this volume here corresponds to this one here, and this one here corresponds to this one here. Price made a lower low, and so did the volume. So this is already a clear indication that the volume to the downside is still high. Price have made a lower low, and then the volume itself have made a lower low also, a lower low, a lower low. So the volume is still showing us that no, we shouldn't be getting in on this trade at this point. And what happened? When price now moved from this one to this one again, you can see another lower low, but then the volume have now increased. All this is still in quarter two. Now, quarter three now kick started. We now had a market structure shift here. We first have this demand zone, this one, which got mitigated at 3:45 p.m. London time. That's quarter three, got mitigated, and price is now moving to the upside, which is very, very cool and understandable. But then this have now shifted our bias from bearish right here to bullish because we've taken a temporary low. We are still bullish right now. We do not have a clear distinct. Now, for this one, we still had a temporary high right here. But this temporary high was taken at quarter one, which was a consolidation, as you can see. So that automatically made it played out too. The price played out, as you can clearly see. We had a structure shift, and then at quarter two, which was supposed to be a manipulation, price tapped into it, and then it played out. But nobody knows if this is going to play out because quarter one have already shown me a consolidation, and quarter two it's supposed to be a manipulation for me. So now notice what quarter two did. It first of all set up an equal high right here. Quarter two first set up an equal high right at this point before it now manipulated this down to this our demand zone here. Of course, we were still buying. We bought from here. If you miss the trade, you could now be saying, okay, this is a demand zone. I'll wait for it tomorrow to use the quarters and see if I will get a trade. It's still manipulated. This is still a manipulation phase. Manipulated down into this our demand zone. And that is where I call this strike. And then the quarter three, which is the distribution, now took price to the upside. Now, whatever was started here have now been completed the next day. Now, you see, if you were holding this trade for a longer time, let's say you want price to break this low right here, you would have been taken out because this was not supposed to take our temporary high if it was going to hold. I don't know if I'm making sense. I believe I'm making sense. I really believe I'm making sense. So this is quarter three. Quarter three have now set up another demand zone, of course, and then we have a temporary low, which I marked right here. Now, interesting case. What happened here? Quarter one here, as I marked it out, X was not consolidating. It clearly had a trend, a move up, a move. This is why this quarterly theory is very, very important in this BFIO case. We had the first move, second move, third move, break to the downside. So this was clearly a reversal from what was happening yesterday, from quarter four yesterday. Quarter four was a continuation, and then quarter one of this particular day, Friday, started by 11 p.m. is now a reversal. That's X could be a reversal or a continuation, but in this case, it was a reversal. Now, after X was a reversal, what did London quarter two did? There was no clear direction. First went up, came down, went up again. This is a clear consolidation of no direction. You can't say that this is a break of structure because it still broke this to the downside and still came up again and broke and all those things. So this is a clear consolidation. Of course, you don't even need me to tell you if this is a consolidation or not. Even if you go to line charts, you still clearly see that it's a consolidation. Maybe bring this down here, then up here. A clear consolidation of no direction. Move to the upside, move to the downside, and come back almost at exactly where it opened. Consolidation. London now consolidated. Now, after London consolidated, remember this is our temporary low that we marked on 1 hour, which was inside the fair value gap. After London consolidated, what did quarter three did? It now manipulated and at the same time took our temporary low because this is a manipulation phase and that was the phase that took our temporary low. I just took this trade directly from this demand zone right here because it has already shown me that this is a manipulation phase. I just called it from this demand zone that was set at quarter three of the previous day, which was also mitigated by quarter three of that exact day I was trading. Quarter three. As price just starts into the demand zone, I called it. And then quarter three, after the manipulation, quarter four continued because quarter four it's supposed to be the distribution itself. Quarter one, quarter two, quarter three. So you can mark quarter four from here to 11 p.m. down to this point. Quarter four. Now, because it started from here. Now distributed, of course, taking price higher and higher and higher. And that was it for this one. Then the next one, we had this temporary high right there. Of course, you know that this is a consolidation of no clear direction, clear consolidation. Price have consolidated quarter one, and you expect quarter two to be the manipulation phase, which is exactly what quarter two did. Manipulated this high, our temporary high, and this is just a clear indication that yes, fine and good, we are supposed to now take this trade because it's coming at manipulation phase. Price have manipulated it, which is quarter two. The volume is in concussion. Volume is complying with what is happening also, and there is absolutely we have a structure shift we got in at quarter two, which is after the manipulation, and volume is telling us that we should get in at the same time. Sorry guys, my battery is getting low. I will just round this up. It's now coming down, so we just take the trade from here, and then what did quarter three do? It completed the trade. Just that simple. So this is the one I was now talking about that I told them yesterday. Here's the last one. This is our ROTA. Notice how all these things are going from day to day to day. I'm not going from I would pick this one and show you it happened there and go to another place and pick where it happened. I'm following it. So if it didn't happen, I will tell you it didn't happen. So this is RTA that I've marked out. It was on a fair value gap on the 1 hour time frame. Now what happened? This RTA was actually taken at Asia, which was quarter one, but then it was consolidating. As you can clearly see, the RTA was taken, but the quarter one was consolidating. There was absolutely no reason for me to trade because we've had a structure shift, let's say around here. Maybe people are now getting in the morning. People will now say, "Oh my God, I'm supposed to get in ahead. We already have a structure shift and price is waiting for us." But look at what happened. Oh, why is the wicks not showing? Okay, it's showing now. Look at what happened here. At quarter two, which was supposed to be a manipulation, we still had a manipulation of this Asian low right here. Price manipulated it. That was now when we had a market structure shift. I got in here and had a 1 to, I think it was up to 1 to 8 or so. Yes, 1 to 8 trades. Still at quarter two because this is quarter two. This is where quarter two ended. And then quarter three was now supposed to be the main distribution. Like this distribution have started, but it started at quarter two and it's not supposed to be so. So when quarter three started and price came down, I know okay, price is now heading back to distribute. This was the other block, but I decided to go with the wicks because it retraced a little bit deeper. I just called it here and just look at the trade. I don't even know if it ended there. Let me see. That was where I paused it. As you can clearly see, this is 5 p.m. This is 4. This is 5. So this is where quarter 3 ended. Now, quarter 4 could either be a continuation of what has happened here. Of course, I was supposed to hold this trade up to this point. Which day was this? Tuesday. This wasn't CPI. So let's see what quarter 4 did. Could either be a continuation or reversal. Quarter 4 is already showing signs of reversal, like price did reverse from whatever happened here. So, guys, that's the way I expect you guys to like integrate this with your trading and see how it works. Integrate it with your trading, see how it works for you, the quarterly, the volume, and every other thing. Let's see. So I'm going to share this video with you guys now, and that's why I wanted to make it as early as Monday so you guys could backtest within the week and integrate it into your trading. For now, I think it should be the last video because I'm not sure I will be doing anything else. You guys can do your own Fibonacci's and use it yourself and every other thing. So thank you guys and see you next time.